Okay, guys, thanks for joining us here in the charts. This is the Market Beast. I want to show you guys that SoFi may be in for a open higher come Monday morning. Today's Saturday. We may get a push higher. I'm going to elaborate in great details in terms of why I say the market may push higher Monday. And we're going to do that in this video. Make it short and sweet. So welcome back, loyal family. If you're new here, we explore price action. Welcome in new subscribers. Let's go ahead and dive into why I see a push higher on Monday morning for SoFi here, shall we? So today's November the 20th, 2021, and the previous close of SoFi is going to be $20.37, slightly negative 0.9% close for the day. Okay. SoFi Technologies Inc. All right. So hopefully you guys are doing well. So let's make this short and sweet, guys. We'll pull up the chart. 15 days of consolidating. Someone had a question about it being 18 days. Remember, I'm not measuring the actual candle that breaks down out of the consolidation range. I'm only measuring the consolidation within the range. And if we look closely here, you'll notice the 3-day candles. The way that I found the ranges are very simple. See how the candle's body aligns with the top portion and, of course, the lower portion of this range. The candle's bodies align with the lower portion, with the exception of the breakout candle, 3-day candles, February the 17th. And we'll go over to the next example. The same thing, guys. I just wanted to kind of briefly show you that I'm simply measuring the candle's bodies for the consolidation ranges. And of course, on this example here, here's where we are present day, same thing, candles bodies. And let's move over to the next example. Now there's something that's very interesting. I'm going to pull up the daily candles and we're going to go back in time. Here's where we are present day. Again, we're going to get to this, but notice that little green candle in the red oval. It makes sense. Let's just go back in time. So the reason that I'm saying that, there's something that's very interesting that happens towards the breakout of the consolidation range. We get that little green candle. See this little green candle? It's not exactly the same, but we get the green candle open. Okay, but notice what happens on the very next candle. It actually opens higher. You see this red candle? The top body, the portion of that body, that red candle, is actually where it opens. There's a small wick there where it actually pushes up and is quickly rejected to the downside. The blue line just simply represents kind of an area, kind of a practical level of as a stop out. And we're going to get to that as we scroll over to present day. But that's the first example. And as we scoot on over to the right, you notice that this is kind of the same setup here where we get that little breakout of the consolidation range at this little green candle. I call it a bullish counter move and a bearish trajectory. Get that little green candle there on the very next candle. Focus your attention on the open. The open is the candle's body, this red candle here. It actually opens higher, followed by rejection below that blue line, and of course it continues lower. So let's go over to present day, and I want to kind of give you the practical approach if I were to enter this market. We're not in the market, just a simple request that we're following up on. Okay, I'm tempted to enter. It depends on where it opens. Excuse me. If it opens closer towards the close, like if it opens like near, I don't know, like $20 and about 39 cents, just kind of a penny higher, I'd actually be interested in entering the market in terms of it kind of pushing higher, but it really must push. This is the opportunity for the buyers to truly show strength here, because you guys know what I look for right at the time. Notice this is like 6 candles down. So I think on our previous video we said like it's about 5 days away or something like that. The interesting thing about what I'm looking at now is the buyers now actually have less than 5 days to show strength to make a bullish counter move. When we say, well, why do you say 5 days? Because again, I'm looking at these 6 candles down, and those who follow us closely know that when you are looking at the behavior between the buyers and the sellers, to truly know the strength between the two, you measure the time. It took 6 days to move the markets down. So that simply means, and kind of in layman's terms, like this is not always 100% accurate. If it takes less than 5 or 6 candles to push the markets up above $23.35, if you watch our last video, you know that's the level that the buyers need to get above here in the short term. Let's just say it takes like 2 to 3 days to get above 23.35 and move higher. That's showing a sign of strength. Again, this video is not insinuating for you guys to go buy this stock. I'm just pointing out the levels and the story behind the price action in order to know what's truly going on, or to at least have an idea of what's taking place behind the scenes. Okay, so if we get a nice push above, then that is of course the buyer showing strength. But if history will repeat, then it's likely here's what to look for, guys. All right, we're gonna look for a small push higher, preferably maybe not preferably, but maybe practically like $21.05. That's just simply measuring the level where it previously had a resistance point. If you look at the daily candles here. So yeah, it would kind of push up to that level and get rejected. And of course, the stop out would be pennies below this level, which is 1994. And that would be my my practical approach in this market. Just have, I think it's like a 2.3% risk to the downside. Now the actual target is kind of hard to measure. I would actually have like a trail stop on this one, but again, don't do that, guys. Follow through with your strategy. It would be like probably like less than a 1% trailing stop. If the market, let's just say it actually starts to push higher, right? And it starts to push up to like $21 and it just kind of gets rejected, nasty rejection. It's likely I'll be in profits before I get stopped out. One may say, well, wait a minute. What if it goes up and then it stops you out and it continues higher? That's fine, guys. It's just, I'm just giving you that as an example of how I would approach the market. I don't necessarily think I'll enter this market, just giving you guys an ideas. Stop out is probably the most important level because according to history, it takes a pretty nasty fall after it gets rejected here in the short term after an official breakout of the consolidation range. And the last thing that I'll point out is this is an actual 3-day candle here, if you notice, and it is red right now. But remember, guys, markets are very volatile, and this is not an official breakdown just yet. There's still 2 days and 5 hours for this active 3-day candle. It's red now. Can it turn green before the close? I mean, the buyers have that opportunity to do so. Let's see if the market actually does that towards the close. The new candle will be printed November the 23rd, 2021. You have all the levels, guys. All the details are here. The practical like setup, I guess, risk to reward would be really simple. It all depends on the open, guys. I'm not sure where the market is going to open, whether it gaps up or if it simply just kind of opens a little bit above where it closed. But I guess the practical approach in terms of the risk to reward, assuming that it opens slightly higher, which is at like, I don't know, let's just call it like $20.41. If you're like long-term investors, please kindly ignore these levels. But I would do something like a 5 ratio, okay? And that is to simply take out the previous swing high here on the 3-day candles, right here at about $22.98, like $23. That would be kind of my approach in this market if I were to play it. Just kind of, you know, a little bit more aggressive in terms of not taking profits at that $21 level, guys. Just ideas. Hopefully that is good, and that's very strategic because remember, the two price target, the stop out is pretty obvious, right? But the price levels in terms of the price targets are very simple. Remember, the previous level of support is at about $21, okay? And the previous swing high is near the $23 level. So that's pretty much why I gave you guys those two price targets if you guys are swinging in the markets out there. Again, of course, follow through with your strategy, but that's the reason why I chose those two levels as practical levels for taking profits as, of course, education information only. All right. That's the end of the video. Hopefully you guys enjoy that. Hopefully this is useful leading into next week. And that is the end of everything, guys. So if you enjoyed that, if you can kindly support the channel before you go by leaving an appropriate thumb, I would truly appreciate it below the video. And also leave a comment so that the YouTube algorithm can promote the video on the channel. Thank you for your support. If you're new, we also explore the alternative markets, Bitcoin, altcoins. Kindly subscribe, hit the bell. We'll send that out to you guys momentarily. I'd like to take this time to thank you all, again, for your time. Remember to always have a plan before you enter the market. Keep that positive energy flowing. We'll talk soon. Bye for now.